Ni hao, bom dia, good morning. Thank you, BTG. Xie BTG. I am Ricardo Geromel. I'm an analyst at 3D Radar, a fund based in Brazil that has 3D Capital as a relevant shareholder. I wrote a book about China tech called The Power of China. It focuses mainly on China tech and innovation. So send me a message on LinkedIn and I will send you the book for free. In fact, LinkedIn is one of the very few Western social media to have had success in China and is obviously invested by Sequoia Capital China. I used to live in China and I moved back to Brazil from China in January 2020. In fact, I had dinner with Eric in Beijing in 2020. Eric, I miss that kind of thing, man. To be honest, I'm very scared with how little the best of China is discussed in Brazil. So I'm really grateful for BTG for giving China in space in this important event. If an event of this stature does not have a China tech panel, something is just wrong. And we still see some of those around. So today we're going to focus on tech and the best of China. Let's kick off. Jeff, let's start with you, my friend. Kuaishou is such a household name in China. Your IPO was extremely successful. Your current market cap is over $120 billion. Yet a lot of people in Brazil still do not know Kuaishou or Kuai. So please, even though you have more than 50 million monthly active users in Brazil, so please give us an intro on you and on Kuaishou.
Yeah, no problem. Happy to. So I'm Jeffrey. My background is actually more in finance. My career has been in venture capital and growth equity. First at a US investment fund called Oak Investment Partners, and later at a Chinese VC fund called Jingxiajiang GSR Ventures. When in 2020, I decided to jump over from finance over to the internet startup world and joined Kuaishou. It's definitely a rocket ship, I can tell you that. Over the past 2 years, the valuation has skyrocketed at least five to 8 times. So very fast growing. And partly why the company isn't that well known outside in places like Brazil is we've been very introspective in the China market. We've been growing very fast domestically. And to be honest, it's finally ready and it's time now to do a big push into international expansion. In the past year, we've invested heavily in markets such as Indonesia, as well as in the Latam in Brazil. And later this year, we'll probably be looking at other new markets such as in the Middle East and potentially elsewhere. We're growing very fast in Brazil right now, and I think a testament to how far we've grown is by this summer, you'll see that we'll be sponsoring the Copa America Football Championship. And that's one of our first big pushes into the limelight, getting some action on the marketing side. So hopefully we can become a household name across all of Latin America very soon.
Nice. I'm happy to hear that. I know you did some beautiful things with my friends at Flamengo. So I'm excited to see what you guys are going to bring on for the Copa America. Yeah, soccer is huge here, Jeff and Eric. And, Sequoia, such a legendary name, Eric. Sequoia Capital China has invested in more unicorns than Brazil has created. And in fact, the guy that Sequoia US sent some good years ago to cover Brazil, David Vélez, he left Sequoia and he started a company called Nubank, which is Brazil's largest unicorn. Yeah, I'm sure you guys are familiar with. So Eric, it's such a pleasure, such an honor to have you here this morning or this evening there in China. Can you please introduce yourself and tell us a little bit more about Sequoia Capital China? How is it different from the US? Sequoia is a household name, and I'm sure our audience has heard of it.
Okay, thank you, Ricardo. Good morning, everyone. Very happy to be here, and thank you for the invitation. My name is Eric Xu. I'm the partner of Sequoia China, and I'm in charge of digital industry cross-border fund, focusing on helping foreign tech companies to enter and expand in the Chinese market. quite uniquely, this is a RMB local currency denominated fund. We only invest in the China operation, joint ventures, carve-out, strategic partnership of foreign tech companies. The background for us to set up this fund is because we have helped LinkedIn and Airbnb in the early days when they want to enter the Chinese market. As Ricardo mentioned, they basically have researched the market. They realize they need a partner locally, which I think is a very smart decision. And in the end, they decide to take Sequoia and CBC, the two leading venture funds, as the partner to land in the Chinese market. And right now, as you can see, LinkedIn and Airbnb has making great progress in the Chinese market, much faster than other US tech companies. So we decide to set up a dedicated cross-border digital industry fund in 2016. And as of now, we have invested in around 6 companies, including leading Silicon Valley SaaS player like Evernote, IBM Watson, the largest IT service company from France, Atos, also a semiconductor company like ARM and ASR. Most recently, we helped another Silicon Valley company's GitLab to set up a joint venture in China in 3 months, including recruiting the whole team in 3 months. So basically, we believe we have identified a secret formula to make foreign tech companies to be successful in the Chinese market. I can share more during the discussions, but definitely looking forward to connect the foreign countries to the Chinese market in the most efficient way. And we are also very interested in working with 3G and other Brazilian companies. Hopefully, after this meeting, we can make more progress in the Latin American market as well.
That is fantastic, Eric. Thank you for this introduction. Okay, Jeff, let me get back to you here. So the Kuaishou playbook of growth in China is widely known. You guys started focusing on lower tier cities, which for people that do not know, in China, if you take out the largest cities, not even largest in terms of population, but economically larger, the tier 1 and tier 2, if you only look tier 3 below, there are more than 1 billion people. In Brazil, you arrived to 50 million monthly active users. So, in Brazil, we have a lot of access to the playbook of growth of the Silicon Valley, of Western companies, but the Chinese way of doing startups is not widely known. So could you please share a little bit about how you guys grew so rapidly in Brazil, where you mentioned about the Copa America? I know you hired the head of Pinterest in Brazil. She was also the first person to be hired by Google in Latin America, so I'm sure your team was a key part of it. But can you please share with us about the playbook of growth of Kuaishou?
Yeah, no problem. If you look at the history of Kuaishou and the founding, you'll learn a lot about its culture. When Suhua and Yishao, the founders, created Kuaishou, they wanted to keep a sense of authenticity and localness. The reason is they actually came from very humble childhoods and beginnings. They grew up in rural villages in China where there's not even lighting to study in the evening. So when they wanted to, after they graduated from the top universities, Suhua, for example, worked at Google, and he went on to found lots of different companies afterwards. He always wanted to give back and keep it real. And so one differentiator in Kuaishou in China is this very important sense of authenticity and localness. So users are able to find video content from their neighbor, from everyone from their local village, something that's relatable. If you compare to apps like Instagram, a lot of times what we find is something that's almost fake, right? Superficial, something too Hollywood. And so that is a complete turn away from this type of media. And so in Kuaishou in China, the model that we have, and we were able to grow very fast through tier 2 and 3 cities, was by focusing on this authentic nature of viral content. So when we grew into Latin America, in markets such as Brazil, we also focus on this similar culture to be able to allow users to view content that is a little bit different from what they see with other social media platforms. Outside of this, within our growth strategy, we also use a lot of different tools that are not that normal or seen commonly in the Western markets and like the United States. One of the keys to our growth is actually our unique referral program. Every company such as Uber or Rappi and Latam will have their own member program. However, the way that Chinese companies do it is much more sophisticated. We're able to target different types of users and give different types of rewards to be able to keep them engaged within the platform. And it provides a much better experience, and it's kind of our secret sauce on how we're able to expand so quickly, much faster than any Western startup.
Well, thanks for that, Jeff. A lot to unpack here. So basically what you're telling me is, you gave a tool to let your user bring new users to you. Here in Brazil, just like in China, CAC, the cost of acquisition of customers is skyrocketing, has been skyrocketing, will continue to skyrocket. So you either have private traffic, you own the client, or you find these smart ways. But Jeff, answer me one question. If one already has TikTok and one already has Instagram and Facebook and Pinterest and Twitter, why to download Kuaishou?
It comes down to the content ecosystem and our recommendation algorithm. It's really that simple. The way that people think of YouTube versus Kuaishou as long videos versus short videos, but it's actually much deeper than that. The way that the app is designed, and the swiping motion allows you to capture data about users' preferences much better. For example, on YouTube, the most important data that you collect is about which videos they click on, not what they actually enjoy and what they like to watch. So that's why you end up getting a lot of YouTube videos with very stupid captions, right? Somebody donates $100 million and you just get it for clicks. It doesn't actually judge the value of the content. When you get rid of that caption and you force users to swipe up and down, you evaluate every video for its core and the quality of the content. And so we're able to provide much better videos to each user, and it's a much better experience. That is the big innovation that a lot of people outside of the industry don't realize. And that's the reason why not only Kuaishou, but also our main competitor, ByteDance, and their product TikTok has been able to grow so fast overseas. And it's because of this combination of great content combined with a great algorithm.
And in China, you have the 4th largest GMV, right, in e-commerce. I mean, if we don't count WeChat, that doesn't really disclose how much is transacted there. Can you elaborate on that? Because in the West, we don't quite see social media really transacting those kind of volumes just yet.
Yeah, no problem.
Are you going to be doing that in Brazil? Oh, sorry, Jeff. Are you going to be selling in Brazil? Is that functionality going to be on?
That is part of the roadmap. Yes, Brazil is one of the key countries where we're planning to experiment with e-commerce very soon. Actually, we're doing even some small scale testing on e-commerce with some trusted partners as soon as this summer. But back to the question was, so for people that aren't aware, we still have a big gap from our biggest competitors like Alibaba. However, being the 4th largest e-commerce platform, we have in the past year we did $20 billion in GMV. That's huge by any metric, right? I think for Mercado Libre across all of Latin America, they did around 20-something billion GMV as well. So just in China, a single market, we've been able to achieve such huge scale. And the reason why is because when you have a relationship with the content creator, there's a more intimate relationship. It's a relationship based on trust, and you're able to develop this relationship on trust through live streaming, because you're able to you give users the opportunity to interact directly with their content creators. And the content creator can't sell something bad, right? If you go on Amazon and the store sells you something bad, low quality, you're mad, but you leave a 1-star review. But if a content creator sells something bad, low quality, rotten, that content creator is gonna get flamed. Lose all its credibility. So the entire relationship is built on trust. And that's why, for example, one of the most famous cases for Kuaishou was Dong Mingzhu, the CEO of Gree, one of the largest air conditioner manufacturers, came onto Kuaishou. And in a 3-hour period, she sold, I believe, around 45 million renminbi worth of product in 3 hours. That was about like 12% of her total annual e-commerce sales volume in just that one session. And it's about being able to identify and connect directly with the CEO of that company. I can look you in the eye, you recommend a product, I trust you. Let me go buy this air conditioner. It's as simple as that. So it really provides a new type of e-commerce experience. In the past, it was completely transactional. I find a merchant, I find a customer, I do a transaction. In the past few years with companies like Pinduoduo, it became more social. So your friends recommend buy this, buy that. And finally, now in this current live commerce stage, it's become a transaction based on mutual trust with a social creator. And that's the change that we've seen in the China market. And hopefully we can bring that to not only Latin America, but the rest of the world.
I can't resist, Jeff. I'll pass the ball to you very soon, Eric, but I have to ask you, Jeff. Live commerce became such a hot topic in Brazil a year ago, but I know it has been happening in China for years. Kuaishou had the largest traffic consumption in all of the companies in China in 2016. In China, you mentioned what you sell. You also sell cars and you sell apartments and a lot of things through live commerce. But we don't see that in the US. We don't see that in Brazil. Do you think it's inevitable? Do you think it's the future of e-commerce, or do you think Brazilians are still doing it wrong? We don't have the technology that you guys have developed. What should we expect down here?
I think it will be very soon. Within the next year or two, we'll start seeing it in markets like Brazil as well as the US. For example, even our competitor TikTok, they this past year they've experimented with e-commerce in a lot of different markets, including Indonesia, including the US. So we should be seeing this type of business model becoming very popular over the next few years. I would predict within the next 5 years, this would be a significant part of our e-commerce sales channel.
Interesting. Thank you, Jeff. All right, Eric, let's get to you now. We explored a bit of Kuaishou, this case of a Chinese tech giant coming to Brazil. What about, have you heard of Brazilian companies getting into China? Eric, you have been involved with so many successful cases of international companies entering China. What do the most successful have in common? What are some of the mistakes that for you are obvious? What kind of business are you most excited about to bring to China? As you explained, you had a cross-border fund. So please share your thoughts on how foreigner brands and their playbook to succeed in China.
Yeah, thank you, Ricardo. But before answering your questions, I just want to comment on Jeff's, live commerce business. I mean, I can tell you that, even in China, the potential is huge. My 10-year daughter is practicing live commerce every day as her favorite entertainment. She just wants to sell, online, whatever, and the drawing, the books. So I am just amazed, the Generation Z, or even after that, they are totally new generation. They are embracing the latest technology, the commerce model, right? So it's pretty impressive. I mean, I try to stop her, but I often fail. But anyway, I think it really tells us something about the connection of the world, right? I think it's all similar. Human beings, are similar. They are embracing new tech. But for my fund, I mean, I'm looking at the China tech from another angle, right? I have been dealing with Silicon Valley tech companies, foreign tech companies, in the last 5 years. Met many of the CEOs, and also even before my 5 years working at Sequoia, I worked at Temasek. And lucky enough, got the opportunity to travel, to Brazil, to Argentina, for some agriculture-related transactions. I mean, there's huge market, cross-border transaction opportunities between Brazil and China. I think JBS is one of the Brazilian companies I have some contact with. There are similar company in China called Copco, and there are some potential joint venture partnership discussions during my working at the Temasek. I definitely see more opportunities going forward for complementary sector between two countries. I would see more partnership between countries in the future. Can see in China is huge for foreign tech companies. The best 10 years for the foreign tech company has been passed. One of the reasons is because the local companies like Kuaishou has really been growing really fast. They raise funds very quickly, and they can develop a new product based on the local market consumers' real demand, including the new generation's consumers' demand. And they even create a market like short video. It doesn't exist before, right? So this kind of opportunities can only be captured if if the decision makers are in the market and can have the autonomy to make local operating decisions. But unfortunately, most foreign tech companies don't have such luxury. We call the traditional wholly foreign-owned subsidiary like China Entry 1.0 model. And there is some new model called 2.0 model, like joint ventures between Chinese companies and foreign companies, but it's very traditional. It doesn't work very well because conflict of interest between the two strategic partners. But what we are doing now is to find the success recipe for foreign tech company in China, which need to satisfy 3 criteria. One is the local operation need to have a full autonomy in operation, in financing, in go-to-market, in product, in pricing, etc. Otherwise, it would be just hard to compete with a local company like Kuaishou. They are nimble, they know what the consumer needs, and they can react very quickly. But unfortunately, most foreign companies have to report to Asia headquarters and back to US or Europe headquarters. That just delay the whole process. So the full autonomy in decision making is key, and the purpose is to do a full localization on product, on local operation. But in order to facilitate that, you need to have a full functional setup in the Chinese market. Most foreign tech companies only have a sales and marketing function here, and even the back office are outsourced to Singapore, or Hong Kong. So basically, they don't have the local R&D, which cannot capture the real demand and the customized requirements, the fast service requirements from the very demanding local customers. And one reason is you need to have this is because the Chinese market is so different. It's huge, and the consumer and the enterprise customers are very different from the Western countries. They have a lot of different requirements, and the ecosystem is quite different. So best to have a full functional setup locally with full operating autonomy. So to achieve these 2 objectives, we found the shareholding structure need to be balanced, need to be more diversified. So basically, what we have been doing is convert the wholly owned foreign subsidiary into a joint venture. Like give you an example, Evernote has been in China for 6 years before we invest in 2018, and they are fully owned by Silicon Valley based Evernote. The growth is okay, but after we invest, the growth rate have been doubled every year, and the penetration and the revenue and the booking are all doubled. So we basically changed the shareholding to a three-way balanced shareholding, where we own 1/3, Evernote 1/3, and management 1/3. So management suddenly got the strong incentive, which I believe is the most important element of the success. They changed the mentality from employee for Woofy, right, to startup management mentality, just like Kuaishou. So they are fully motivated and they have the autonomy. So right now we just closed Series B financing, where Evernote actually sold a small percentage of stake, and pretty much recoup all the investment in China in the past 8 years. And we made money, and the management is very happy as well, and they became the controlling shareholder now. So basically, this is just give you some flavor. This is, I think this applies to both B2B and B2C market. I believe more Brazilian companies, if they can really understand the local market's dynamics, the competition dynamics, they will realize such setup will make them come to the market much faster, and the success rate is also much higher. So that's something I want to share, and that definitely we are very open to working with Brazilian companies in the Chinese market in this model.
Yeah, I cannot wait to have more Brazilian companies in succeeding in China. But a few comments on what you said. You mentioned Kofco. I actually used to work for Noble Group, a trading house that was acquired by Kofco. You mentioned about live commerce, and I have to say, in China, the most desired career for people under 18, there was a research on this, and it is to become an influencer. So your daughter is not alone, Eric. And in China, there are more than 30,000 MCNs, the agencies that manage influencers. Yep. Over 1/3 of all ad spending in China goes to short video. So yeah, live commerce is a huge topic, and I'm happy with what I heard from you guys. But I have to say, Eric, on what you said, here in Brazil we have this phrase. Maybe you heard it, Jeff. If not, somebody will tell you. I guarantee. The phrase is, Brazil is not for beginners. Mm-hmm. Eric and Jeff, is there any phrase like that about China for international people and companies that want to do business in China?
I can think of the most common one from my perspective will be if you want to invest in China, you need to be patient. I mean, I heard from a lot of CEOs from foreign tech companies. It's just take time. I mean, to get to know the market and to see the results, from the market. It could be 5 years, could be 10 years, and if you don't have such patience, then it will be more likely to be disappointing. Given it's so different. Between these two markets. So that's my sharing on this. Maybe Jeff, you have different. Saying?
I don't have any saying, but the thing I wanted to emphasize was, my agreement with you on the importance of finding either a good partner in China or to do localization properly. I think China is very different from most markets where the government has built a very large moat for preventing or making it difficult for foreign companies to enter China, because they don't want the relationship to be one-sided, right? You extract value from our consumers in China. The relationship that the Chinese government wants to build is a mutually beneficial relationship where, for example, a foreign company from Brazil is able to benefit from the local market in China, but also at the same time, Chinese firms and employees can learn and benefit from that experience as well. So it's a sort of a arranged marriage, if you will, by the Chinese government to force both countries and their citizens to work together in a better way. But that causes challenges if, like Garrick said, if you're not willing to give away some of your control, it makes it very difficult to succeed.
Fantastic. Thank you for that, Jeff. And since you brought up the Chinese government, do you want to tell us, the 5-year plan was recently published publicly. Do you want to share your views on how that impacts your view of the market, or the main tenets, or the market itself, or your frameworks? Maybe Eric, if you want to start.
Yeah, I mean, this really coincidence. Okay, right before the new 5-year plan was announced, we invest in an open source software company from Silicon Valley called GitLab. Actually, we have been talking to them for 16 months, and it's just got close before the new 5-year plan was announced. But in the new 5-year plan, open source software is one of the areas are highlighted. So suddenly there are a lot interest in the open source software space. But this will definitely be more favorable to our company, in the Chinese market. Both GitLab and investor like us are very happy to see this. But I truly believe this is beneficial to both sides. China as a country is not just an end market; it also has the largest talent pool. Basically, one out of 10 developers are in the Chinese market, and China has 8 million graduates, college graduates every year, and 5 million of them are STEM majors, and this number is 10 times that of the US. So basically, GitLab and other tech companies realize, it's not just for the end market, also for talents. They want to fully utilize the developers communities here, which actually contribute and also consume a lot of open source software. And that's why they are very determined to come to the Chinese market, and they are also very determined to find a partner like us. And they believe with a partner, they can just enter the market and be successful more easily. So we help them to land in China in 3 months, and right now it's making great progress. So I would say the 5-year plan basically will accelerate the priority sector, the strategic sectors. And if you can catch the right trend, you will benefit from it. Otherwise, you just may be growing slower. That's just my take.
Very good. Jeff, do you want to add anything there? And maybe, Jeff, if I may add, community group buying is such a huge mega trend in China. We're talking billions and billions and billions of dollars being invested by all the major companies. Do you want to explain a little bit about community group buying? We don't have anything like it in Brazil. What is your take on it? And what are some other mega trends that we should be paying attention to? And I'm the kind of guy that prefers always to look at individual companies than trends in general. So if you also, Jeff, want to share some companies that we should pay attention to, please go ahead. And then I'll pass the ball to you, Eric.
Yeah, no problem. So the 5-year plan, this is the 14th iteration. It was 2021 to 2025. And it came at a time when U.S.-China tensions were deteriorating, right? So the most interesting difference from the previous 5-year plan for me was this change and increased focus on self-reliance, especially on core industries such as semiconductors. In addition, there's also focuses on other different industries that are emerging, such as electric vehicles. I've spent a significant amount of my career in clean tech and electric vehicles, and it's finally starting to take off in markets like China. China has always been the largest by volume producer of electric vehicles and consumer of electric vehicles, but it seems finally things are becoming mainstream. And so for these type of markets where where the entire government from macro level is putting pressure to shape the economy, you definitely can catch, like Eric said, you can catch the right wave, and you can go very far. Your second question was related to community group buying, and for those who don't know, it was pioneered by Pinduoduo in China. It's one of the top three e-commerce company in China, and their entire model for growth was to have your friends and your neighbors share different deals and join a group to purchase different products. It really is less of a e-commerce strategy, but it's more of a growth strategy. And I say that because that is the core to how Pinduoduo itself grew together, because it leveraged this social element because and this word of mouth to be able to grow and get new users and grow in the market. However, I would say, in my opinion, that's old news, actually. So community group buying was what we were talking about maybe 3-4 years ago. And now with companies like ByteDance and Kuaishou, with live commerce, we've really changed a lot of the e-commerce market. And so it's shifting now to different models that people are still experimenting with, but are fast growing.
Very nice. Eric, what would you say are some of the mega trends that you are mostly excited about?
Yeah, I probably have different focus from Jeff. I'm more focusing on the enterprise market, which I believe could be the next trend in the Chinese market. China has really done really well. I mean, the B2C market, with leading players like Kuaishou, Alibaba, etc. They create a new model in the huge consumer market, but we are seeing the internet penetration is peaking, right? And so they have to be innovative and to find the niche segment. The segment hasn't been transformed through the digital approach. But for the enterprise market, I believe is further behind Western countries. The user experience, the customer experience are still not smooth. I mean, compared to the consumer internet experience, it's a couple of years, even 10 years behind. So we are seeing huge opportunities there. And with information technology, operating technology are being converged, and with traditional industry, manufacturing industries are being transformed. We are seeing a new generation of entrepreneurs who are educated or worked in the Western countries, and they see the latest enterprise technology that can be applied to the Chinese market, but have to be adapted locally. So it's different pace. It will not be explosive growth like Kuaishou, but it could be taking longer time, but it just can be more sustainable to us. I mean, it's more capital efficient. So we are trying to invest in more enterprise software companies, which are very critical to some industrial sectors, manufacturing sectors, but they are bridging the gap between China and the West. And there are some bottleneck, software, like we are looking at industrial software, right? I mean, it's not just software; it's a specific application in the industrial sectors. Also, like the EDA space, we invest a company who actually raised 1.2 billion RMB in 18 months through 6 rounds financing. But you can see the appetite from investors are huge on enterprise software. It's not explosive growth. I mean, they haven't shown any revenue yet, but investors are really interested because the potential is huge. And Chinese has the talents, and China can, work out or develop their own products. Like Jeff mentioned, I mean, to be more self-reliant. I mean, in the long run, right? So we definitely see the enterprise software and the B2B market is the next big wave. But the dynamics could be different given the consumer, the customers are very different. And the buying behavior process is very different. It's more challenging. It needs to be more patient, I would say.
Oh, I get it. Very interesting. China used to be the world's factory, largely based on very cheap labor force. What not everybody realizes is that China remains and will continue to be the world's factory, but not based on cheap labor anymore. Right now, the GDP per capita in China is equivalent to the one of Brazil, about $10,000 per person. It will be based on efficiency and productivity. And we see, here at 3D Radar, we invest in a company that manages ports called Wilson Sons. Fascinating company, has been around since 1837. And we visited a port in Shanghai, and one port in China does more in containers than all the ports of Brazil combined, with only 231 people employed on site. How? Technology. So it's fascinating. It's just fascinating. And Jeff, going back to you now, you mentioned when we talk about the 5-year plan, you mentioned the tensions between US and China and how that impacts the 5-year plan, and that generates so many waves. There is also a tension between India and China. I believe Kuaishou was one of the companies, over 150 tech companies from China that were banned from India. And then in your first talk, your first thing you said, one of the first markets that you guys started was Indonesia. So the way I see it, the Southeast Asia is the backyard of Chinese tech. It's the first international market they usually go to. And then, so let's talk about more this. I personally believe that is a Chinese tech tsunami coming from China to Brazil. Brazil is the world's 50th largest country in terms of population, and we are dear partners. China has been Brazil's main trading partner since 2009. The opposite's not true. Between 2012 and 2016, China invested more than twice as much as American companies invested in Brazil. We have seen companies like Tencent invested in Nubank. Didi acquired 99, Brazil's first unicorn, and Group invested in Stone, and more recently in Dots. Not all of these large tech firms do well here. Baidu acquired a company that recently bankrupt, was a group on Copycat. So what should we expect? Is Kuaishou one of many? When I see the most downloaded apps here in Brazil in iOS, Shein is up there. TikTok, Kuaishou, Shopee, that is not Chinese but is owned 20% by Tencent. So what do you want to share on this Chinese tech wave that will be coming to Brazil? What is your take on that?
Yeah, if you look at macro level, right? I think one biggest change from the U.S. is this pullback from globalization. There's decreased investment across all of the different countries with maintaining the social order that they spent so much time and money to build up. So, for my side, it was interesting watching last year with the Trump relationship between Trump and Bolsonaro in Brazil, that echoing relationship. I question over the next couple of years as China increases its influence into Brazil and the U.S. pulls back, how that relationship will change. Like you said, China has invested huge amounts of capital into Brazil and has been a major trading partner. And you're right that Chinese companies are now turning their eye to global expansion into Latam. Traditionally, it was always first market was to go into the Southeast Asia just because of the cultural similarity, the physical proximity. But we've realized that Latam the time is ripe for innovation as well. I think consumers are ready for trying different models, and there's a lot of different infrastructure that we see coming up locally in Brazil. I think one of the most interesting cases is in the past half year, there was the launch of the Pix system in Brazil by the government. That alone has transformed the entire fintech industry. We see it not only within Kuai, but also our partners as well. The adoption has been tremendously fast, and it is one of the areas where we see that opens up opportunities for innovation of different types of levels, and there's a lot we can do there. So I think Chinese companies are seeing this type of flexibility from markets like Brazil, like Colombia, like Mexico, and especially with Western companies start slowly decreasing their investment. We think it's a good opportunity to expand into these markets.
Nice. Thank you, Jeff. You mentioned the word infrastructure. This is one thing that Brazil lacks. And Eric, you being more focused on B2B, how is 5G already impacting the society in China? And how will it evolve, in your opinion? I read that more than 200 million people already have access to 5G in Brazil, in China, sorry. In Brazil, we're nowhere near that.
Yeah. I think based on the latest statistics, China is aiming, so 5G will have a 40% penetration rate in China in the consumer space, maybe 35% for the industrial, the enterprise space. So it's pretty fast development, and we are seeing the benefit of it. I think definitely benefit players like Kuaishou, right? I mean, the video players. And the user experience is being improved. So there are a lot more applications are benefiting from this trend. But I from my perspective, I will say a lot of industrial applications will be accelerated due to 5G's deployment, including the IoT, the industrial IoT, including the industrial software companies. They need to be connected together in order to be digitized. So 5G is an enabler, and there are more technology companies is building upon the 5G infrastructure. So I would say the Chinese government is really efficient in enabling infrastructure investments such as 5G, which just cannot be done by private investors. And with this kind of infrastructure in place and much faster than other countries, it gave the opportunities to China tech companies, even foreign tech companies in China, to leap forward in capturing the next generation opportunities in the industrial space. So that's why we are very optimistic about the enterprise service sector for the Chinese players to catch up with the Western countries if the infrastructure is just developing as fast as this.
Very interesting. Brazil, that was an IoT focus fund, the first one that was recently announced from my friends of Indicator Capital. We're proud investors there. They are anchored by the Brazilian National Development Bank, BNDES, and also by Qualcomm. So any of your leading companies, we can connect offline to discuss this. But we need, as you said, the talent pool in China. Brazil, in this new digital economy where the raw material for everybody is brains, well-trained brains. China has culturally a society where your president was an engineer from Tsinghua, your former president was an engineer from Tsinghua, and you worship engineers. In Brazil, it's not quite the same. But moving on, Eric, I want to ask you, China was the economic growth engine of the last decade. It will be the economic growth engine of this decade. A lot of investors and family offices and friends want to have more exposure to China. And a lot of them ask me for recommendations. What I always say is, please promise me you're not going to invest before you go to China. At least go and see with your own eyes. I think that is very important. What is your recommendation for people that want to increase exposure to China?
Yeah, I mean, I think your advice is very smart. I mean, China is so different. I mean, and it has been developing and evolving very fast. I mean, even for Chinese who maybe have been working overseas for 5 years and then come back, they may not capture the latest development, the latest dynamics here. I just met another investor from Australia who is a Chinese, and he showed me the terms he received for potential investment. I mean, it looks normal to me. I mean, it's just China standard structure, but it looks very strange to her. Yeah. Anyway, that shows you, I mean, how important it is to be in the market, have some feel at least, talk to consumers, the local consumers if you are investing in the consumer space, and talk to the enterprise customers if you are investing in B2B space. It's quite different. It's like 2 words, you know, at a different stage of development. So, but it's also hard for foreign investors to invest directly into the local companies. There are so many traps, and there are also different, you know, behaviors. You know, there are different style of management. There are different companies doing different business models. It's really hard. It's complicated environment for even investors who have been in China for a long time. So the best approach I would recommend to invest the fund who have been in China. You can, I mean, definitely like 3G, you have the fund of fund, and there are also China fund of funds. There are also China private equity fund. You should allocate the capital based on your time horizon, your expected returns. So one thing I would mention that in China, even the investment world is being consolidated. You know, Sequoia definitely is you know, getting more investors support with a huge AUM. I think Sequoia China's AUM is bigger than Sequoia US, and it's because the opportunities here is bigger, and we have a stronger team, and also more important is the ecosystem Sequoia China has built in China. That's hard to be replicated. It's not just money. It has to be the brand, the people, and the approach, also the eco-partner system we have built over time. So we can see the best companies, and we can secure the deal, the investment opportunities at the best terms. And definitely this will be benefiting to entrepreneurs and also our investor as well. So invest in the experienced funds who has been operating in the local market, I would say is a safer way to benefit from this. If you want to invest, if you want liquidity, you can invest in the secondary, the private secondary fund. I mean, I would say, I mean, my personally also allocate some capital there. They offer most of the Chinese high quality companies got listed, right? Either in US, Hong Kong, and China, and there are more of them coming to Hong Kong and the China market. So I would say, if you cannot invest directly in the private market, investing in the secondary market is another way to get exposure to the high growth here. Otherwise, it's hard to benefit from the China's growth.
Yeah. You mentioned the Chinese reality is so different. Your new NASDAQ, the STAR market,
yeah,
very soon, it was created less than 2 years ago. Very soon, we will have more companies that are all listed in Brazil. The scale is just so different. When we talk scale, Alibaba just released their numbers. 1.2 trillion US dollars in GMV. That is, if Alibaba were a country, it would be only 17 countries have a GDP larger than the GMV of Alibaba. Jeff, how is it operating in a country where, you know, there are these giants like Baba and Tencent, these 800-pound gorillas? That is a joke in China tech. There you're born, you grow, and for you to not die, you either marry Alibaba or Tencent. Tencent's investing more than 800 companies, is more than most funds in the entire planet. And Alibaba also investing hundreds of companies. How is it playing a market like that? And I want to ask you and then Eric, you know, the first wave of tech giants in China was Baidu, Alibaba, Tencent. The second wave, Meituan, ByteDance, Kuaishou, Didi. Where is the third wave coming from? Who are some you would bet on?
Yeah, so you mentioned Alibaba, right? The other BAT, Tencent is a great example of a company that by US standards should not exist. It's ungodly, right? Way too big and would get broken up by the government if it were in the US. I mean, if we think about it, Tencent's most well-known application is WeChat, right? Where you have penetration higher than WhatsApp, and it's used for everything from your wallet, for rent, for shopping. You can check your COVID test. You can book a doctor appointment. You can even call the police from WeChat. However, it's important to remember WeChat's only one of 7 departments within Tencent. Each of these 6 other departments by itself would be compared very favorably to other US companies, if not embarrass them. For example, the payment services division is comparable in size as PayPal. The subscription revenue is roughly the same as Netflix. They make more games, more revenue from games than Sony or Nintendo. They are a huge investor in Epic Games, who owns Fortnite. They wholly own Riot Games, who was the creator of the League of Legends games. Tencent itself is not a gaming company, but yet it is the world's largest gaming company. So that just puts into perspective how large these companies really have gotten to this day. As we go into this new decade, I think this will continue. It may be a little bit impacted by things such as, if you see with the Alibaba anti-financial scandal, or not scandal, but chaos this past year. But with deteriorating U.S.-China relations, there will always be this big protective moat protecting Chinese domestic companies and allowing them to not only increase global reputation, but also increase their power within China. So for me, for the next wave, I've always been a very big advocate, and I've seen China's focus on the clean tech industry. So if you're looking at the electric vehicles, Tesla has just entered China, but if you look at all the Chinese domestic electric cars, as well as the entire supply chain, China has a vision of becoming the heart and soul of the entire manufacturing chain for electric vehicles. So even if a car is manufactured in the US in the future, likely the batteries will come from China. And so this entire industry, whether it's the brands itself, like even Xiaomi is about to manufacture electric vehicles, to the battery, to the cathode materials. This entire supply chain has a huge advantage by being in China. And these type of industries, not only electric vehicles, but by following the 5-year plan and the government's plan, you can really catch a wave for this third wave of investment opportunities.
Thank you, Jeff. Eric, you want to add on anything on that?
Yeah, maybe on the tech giants first. Agree with Jeff. It has gone too far. I mean, basically, Sequoia, China's biggest competitors is BAT's investment arm. We are just cannot compete with them since they have a lot of strategic synergies. They offer different terms. But sometimes they could also be our exit options. The company we invest, we sell to them at a later stage. Sometimes we invest together, but totally agree. They should, that's also why the Chinese government is strengthening the anti-monopoly, enforcement, right? You saw the Alibaba being fined, and they are Meituan also being fined. So I think finally it come to the point. I mentioned this challenge, this issue, like a couple of years back. It's hard for new startups to really grow healthily and fastly, and with the competition from BATs is too dominant to survive, to grow. I mean, ByteDance and Kuaishou really are the exceptions. But going forward, I think the competition landscape will be more level field, and I'm a little bit more confident right now. Also, I would say the consumer, the B2C space is probably different from B2B space, where BAT have little or less competitive advantage. It takes times, and they may not have all the strengths there. So this is on the first one. But on the future mega trend, I think the IoT probably will be sort of the longer term trend. Given everything is being digitized, everything is is being connected. So the enabler of the IoT space, and who are providing the operating system, the software, the hardware, including electric cars, are all connected. You have to be digitized. So I think that will be like the new type of internet, connecting the world with different technology, and that's why we invest in ARM, who actually are the largest IP provider for our mobile phones and and IoT chips. So basically, I think the trend is pretty clear. It's just when and how the company, which players can benefit from this trend. We are definitely looking carefully at this space, in the next few years.
Yeah. And if there are any doubters in the audience, just look what happened to solar panels. When China decided we're going to be world's leader on this, China was not top 10. And then they just crush the entire supply chain, the entire world. And now the price is a fraction of what it was. And nobody can compete with the Chinese. And when we look at EV, there are more than 400 companies already in China doing energy vehicles. And the big tech is getting into that. Jeff, when you talk about Tencent, the scale was so evident, but also the speed of how things happen in China and the culture. And we didn't mention 996, which is very different from Brazil. But anyway, my friends from BTG tell me that our time is up. So I really enjoyed this talk. I could do this all day. Jeff, do you have any closing remarks, my friend?
Just I want to say, I think Brazil and China has a very good opportunity to work together, and we're hoping to find great partnerships. Thank you for this opportunity to BTG as well as to Ricardo.
For the people watching, what kind of help or how can they help Kuaishou in Brazil, or what would you need? And I need to ask you this. Sorry for running a little late, but dude, how is it doing business with Brazilians? What were some of the highlights and what didn't go so well?
For Eric was talking about how it's difficult to enter for a Brazilian company to enter China, right? So likewise, for Chinese companies to enter markets like Brazil, we also need to learn and localize, and that's just a stepping stone that we'll have to figure out. It's definitely challenging, right? Not only on culture, but things like 996 work hours that we're very accustomed to in China. Lots to learn for our team as well.
996 is even illegal in Brazil. That's why the person is a partner. Believe it or not, it's just different. Eric.
So for those who don't know, 996 is just working from 9 a.m. to 9 p.m. 6 days a week. That's the standard for Chinese companies in the tech industry.
Yeah. Thank you, Jeff. Man, so nice seeing you. I hope we can see each other in person again soon. Eric, any closing remarks?
Sure. Again, I think it's a great opportunity to share, different views, on the cross-border opportunities on the Chinese market. But again, like Ricardo said, it's best, to come to the Chinese market to take a look and feel it. The last dinner, I think, Ricardo, you guys organized in China is very helpful. I mean, it's hard for us to explain, verbally. And when you are in Beijing, in Shanghai, you can see the dynamics here, and you can also feel the market opportunities, and then we can definitely work out win-win, formula for both sides. I truly believe there are better ways for the two countries to work together, either on the consumer space or on the technology space. It's just two big countries, joining hands, that can benefit each other, and I look forward to contribute to this, initiative.
Oh, fantastic! It's my passion to bring together China and Brazil. So, Ricardo Geromel here. If you send me a message on LinkedIn, I'll send you a free copy of the book, The Power of China. This has been great. Thank you again, BTG. Thank you, guys. Have a great night, Eric. Have a great morning, Jeff. I know you're in California. So nice talking to you guys. I could do this all day. Very soon, we're going to be together in person again. Have a great one. Thank you, everybody. 再见.
Obrigado. Thank you. See you next time.